Hey team, hope you're well. Today I've got an exciting video that I want to share with you guys about a tool that I've created, and it's very comprehensive. Like, I can't see anyone that's made a tool anything like the one I've just made, and I want to go through it because I think it'll be really helpful for those people that are determining if it's worthwhile, reevaluating their mortgage, whether it's with their existing bank or moving, etc. And some people actually watching this video, to be fair, probably won't even know what I'm going into with this like title of the video, right? It's probably regarding a break fee. So one thing I think it's important for me to just quickly go over how it works and what it means. So I'll go into that, but also keep in mind for this video, you will get clarity in terms of like what is the best solution for your mortgage if you currently have one, or it also will help if you are going to be having a mortgage and things to think about if you do get one. So there'll be a lot of clarity and insight, not only if you aren't someone that is like looking to have a mortgage, you'll get quite a comprehensive understanding that you won't probably see anywhere else. Like, this specific tool that I've made is very, very unique and very comprehensive, but I'll be able to explain it quite thoroughly in this video. So in terms of what a break fee actually is, so I've put a bit of a summary here, and I'm going to give an example of a client that I actually recently spoke with, and we were determining what their break fee was to evaluate their position. So we're going to look into that a little bit more on this. But basically, depending on how much deposit you have, say when buying a property, will dictate what interest rate you have, because you are more risk to the bank if you have a lower deposit, right? So say if you have a 20% deposit, the 1 year fixed rate currently, you probably expect something like 4.59. I've actually said here it's 4.69, but let's just say it's 4.59 just for the sake of this video. When you're watching this, it might be a little bit different what the rates are. But in New Zealand, you can fix your loan for like a duration of your choice. You can also fix for 3, 4, and 5 years. I'm just going to specifically, say these because these are the most recurring fixed terms I've been sort of, suggesting to my clients. Sometimes it's a little bit different and it's case by case, but let's just use them fundamentally for right now. But you can see here in terms of like, depending on what deposit you have will dictate your interest rate. So the reason why I'm putting this visual here is because I have a client that I prospected. So they might have inquired through like a Facebook ad of Blueprint Finance, and, we were going through, what their position was. And a bit of a snapshot of this is basically they bought a property for 2 years ago, or 18 months ago from now, but they fixed their loan for 2 years, right? So their interest rate is 5.49. It's a little bit higher than, say, where the interest rates are now. Maybe they would have had some sort of margin on their interest rate, right? So I won't go too much into the specifics of this, but the loan amount for this property, 537, but the valuation has come in at a level where they do have enough equity to suggest that they have 20% equity in their property, right? So I think the magic number they sort of needed was somewhere around $720,000 based on their loan amount. So if they owe $537,000, or maybe I've actually got these numbers a little bit wrong, guys. Actually, I think it was more like they have a loan of 579. So let's actually just quickly refine this just so I'm closer on this. This is as of the time, and we'll work off these figures. So I think the bank valuation was sitting around about this, and this can be quite helpful for this, client in the event that maybe they can remove this margin from their rate. So me and this person, we're going through the potential aspect of like what they can get and if it's worthwhile moving, right? So I think that will be helpful for you guys to see sort of my workings and an analogy for this. But one key thing that's really important to determine the move is that if they're going to leave their existing bank or potentially approach their existing bank and see if they can get a better deal, is what their break fee is going to be. So they fixed their loan for 2 years on the 23rd of March, 2027, and they bought 2 years ago, right? Now, one thing that this person would have also received that goes on top of the break fee and maybe isn't so relevant to this video is they would have received a cashback. So from my understanding and also being within the industry at this time, 2 years ago, I know that even if they bought with less than a 20% deposit, this bank would have probably given them $5,000 worth of cashback. Now, if they were to leave now, this would be about 18 months into their tenure with that bank, they would owe probably half of the cashback back to this existing bank if they were to leave. And they probably won't receive an retention cashback because they're already within their cashback period. So that's something I'm like taking into account with all this when, going into detail. Actually, I've just realized with the numbers, I've got this a little bit wrong. So this would be referred to as clawback if they were going to leave, but they would also get a new cashback from a new lender in the event that they can, display that they've got enough income, equity, credit to be able to do this. So generally it's 0.9% if you have 20% equity at most main banks. So say if their loan is 579, like I've said in this video, this is sort of what they're looking at, $5,200 from a new lender, but they would owe this to the original lender. But now this break fee is sort of what we're going to go into. So sometimes when I'm doing like a initial review for, say, a client, determining what they could do, I might just look at this and think like, okay, I sort of roughly know what it might be just from doing a lot of these, right? Like I've probably submitted 150 to 200 applications over the last 2 years, and I've also requested break fees and offerings from existing banks. I sort of have a bit of a gauge, but it is honestly really, really tricky to get within like a certain accuracy just from eyeballing it and doing some napkin math. So I created this calculator, okay? So this is what we're gonna go through today. This break fee calculator might look a little bit overwhelming, but basically what I've done is one day actually, I was actually getting quite frustrated with like getting really like mixed break fees from the banks, and a lot of people that I had like been asking, trying to determine what they were, just weren't telling me. Like it was just like they didn't probably know themselves. I'm asking Claude, I'm asking ChatGPT, and I'm just like not getting the outcome I'm after. So I literally ask one of the main banks when they're giving me a break fee that I didn't think was reasonable, is like, please just show me your formula of like how you determine this. Like how do you get to the conclusion that the break fee is this? And they sent it to me. They gave me this like PDF like format of like how they determine their break fee, which is like pretty fair. It's probably pretty common and reasonable for them to do that, right? They can't profit from this transaction. That's an important thing to note. They'll be audited and the regulators, go through all that data to determine like they're not profiting from it. This break fee. So I wanted to see that. One thing that I think is like just necessary to know, and you don't need to know, I guess, so much for this, is that the banks break fee that they pass on to their client is just the interest that they're going to be missing out on, right? So they're not, making a loss in doing this. They've locked in this funding basically for this amount of time. And because it's like what they're missing out on, it's not necessarily how much interest you'll save over this period from like, the remaining period versus where the retail rates are, it's the wholesale rates. So what I compiled is I got the data from all of the wholesale rates in New Zealand over the last 8 years. You can download it on like the Reserve Bank of New Zealand site. There's also like a site on interest.co.nz that you can look at with like a graph view, but I got the actual data from the Reserve Bank of New Zealand of like all the wholesale rates for every loan term, and I pasted the PDF like calculator I got from like this bank and made this calculator with all this data. So now like if I'm looking at my client scenario, like when I was just like spitballing in, maybe doing some napkin math, to me, I'm thinking like, okay, this could actually be an opportunity to maybe move this person to another bank because they can get a lower interest rate for one right now. Their break fee might be say $1,000. Maybe they have to pay a lawyer to refinance. Maybe they don't necessarily make so much from the upfront transaction, but they'll at least be on like a lower interest rate now, or could secure a lower rate now, if the numbers allow, right? So there could be some benefit to move them over if I'm looking at this as a break fee. So I can ask the existing bank and actually figure out what it will be, but to save my client's time and myself time, this is why I built this, right? So if we go into this and I say their loan is 579, and the fixed rate date, they fixed on the 23rd of the 3rd, 2025, they fixed for 2 years. It's going to pre-populate what the wholesale rate was when my client's fixed on that specific date. If I'm proposing, say, like we're going to do this now and go through with this, I'm probably going to say that the date for this would be, let's say the 15th of August, 2026, and the fixed rate end date is the 23rd of the 3rd, 2027. So that would mean I think there's 220 days remaining between now and when their refix is coming up for renewal, but there's a change and difference in the wholesale rates between the remaining term and when they originally fixed. And that's a really big thing, right? Because it's originally when they fixed this term, this is when the bank basically secured that contract, and this will determine what interest they're going to be missing out on, right? So if we look at 579, these whole rates and the change, the days remaining, the break fee is actually $2,500. It's actually a lot more than sort of what I forecasted with like just the quick assumption, right? Because I'm taking into account like not even the margin in this, is just purely what the wholesale rate was at the time, right? The margin's added on. It's a different sort of calculator, and maybe the original bank they're with, I can determine and see what it is, but my calculator gives like a pretty it's got a good record of accuracy, right? Like I think I've done like 30 different break fee scenarios, and like of 28 over the 30, it's been within like a 90% accuracy or 10% above or below what the break fee is. So there's a bit of insight to like me going above and beyond of like what I like to prepare for my clients just to save them time and go into detail of like if it's worthwhile doing something, right? So for this existing client, my initial take is like, it's probably not worthwhile, honestly, them sending the documents to me and going through with this whole process right now, right? Like if their break fee is going to be $2,500, they're actually honestly probably going to have to pay more upfront to actually leave that bank. And the interest rate savings they're going to get is actually just like not worthwhile to move. So probably we'll catch up with this client maybe later on closer to the time. And maybe they're, clawback that they would owe to the original bank might go down. Maybe there might be some other, good cashback offers, or maybe there might be something the original bank will offer. So that's something I'll recurrently review them. So yeah, hopefully that's helpful, guys. But I just wanted to go into depth of that. If you want to get access to that break fee calculator, I think that's something I could probably share publicly. Like, I only recently made it, but yeah, just like another additional thing I provide in my service in terms of like what's the best thing to do. So hopefully that helps, guys, and you enjoy the video. Feel free to also check out my other videos if you'd like, of other things I've talked about that might be helpful to you as well. Cheers.